Privacy techniques for asset protection optimizing your low-profile strategy. It is now more crucial than ever to protect privacy, with 4.4% of the world's population and 96% of all lawsuits worldwide occurring in the US. Therefore, maintaining a low profile to avoid becoming the object of a lawsuit is a prudent financial approach. Own a luxurious vehicle. Reside in a lovely home. Share pictures from your holiday on Facebook. You've just opened the door for the shark-like solicitors to attack and take what is rightfully yours. Thus, you must take the required actions to safeguard your assets and keep a low profile. That is, if you want to stay out of a violent legal struggle with creditors. This finding is particularly relevant today because plaintiffs file an increasing number of claims every 10 years. The moment has come to learn about asset protection and privacy strategies. Admit it, you might end up the next casualty of a lawyer looking for a quick fix. Thus, you ought to get ready right away. Defend yourself against possible losses that can arise if you neglect to create your asset protection strategy. You can start learning how to use privacy strategies and safeguard your possessions right now. Therefore, if you plan, there's no reason to worry about losing your assets in future litigation. In this manner, you can be certain that your way of life and your hard-earned money are safe. Even if you do end up caught in a row of legal teeth, you can still sleep soundly. We provide you with a list of privacy measures to help you better understand asset protection. You can remain low-key and safeguard your possessions with the aid of these tactics. A collection of asset protection privacy strategies is provided below. They can support you in maintaining a low profile and safeguarding your assets for future generations as well as for you and your immediate family. A safe asset protection privacy plan is often developed by combining several different strategies. You never have to file a list of management when you form an LLC in New Mexico. It is unknown who controls and owns the LLC. The public documents contain no information on ownership or management. Unless you tell them or are forced to do so by a court order, no one can find out who owns it. The yearly fee for New Mexico is free, in contrast to Nevada, which as of this writing charges well over $500 for the first and annual list of managers and business license fee on top of the startup fee. Yes, exactly nothing. The New Mexico LLC may be subpoenaed, even though it is not required to submit a list of managers. Furthermore, anyone may quickly verify the company's existence on the internet. You can't even locate the Nevis LLC on the internet. You cannot access the public record online. Therefore, no one would be able to simply learn that the company even existed. Additionally, since the offshore bank account is in Nevis LLC's name, you are working with a bank that you cannot just force to provide information by some lawyer down the block. In contrast, the New Mexico LLC is beneficial. Use of the Nevis LLC as a privacy technique is far superior. The majority of states and nations demand a corporate designator to be included at the end of a corporation's name. Words like corporation, incorporated, limited, and their acronyms Corp, Inc., Inc. Ltd. are examples of corporate designators. A company designator is not necessary in Wyoming. This is what that implies. You can name your corporation Pat Gunderson without the suffixes Inc. or Corp if your name is Pat Gunderson. Let's say you get a check payable to yourself and you have a judgment against you. Do you believe that putting it into your company account may be advantageous? There is no direct connection to you because your firm has its tax identification number. The bank account may have you listed as a signatory. As an alternative, you can choose a reliable friend or family member as the signatory on the business account. However, it's important to emphasize the phrase reliable. Maybe you could get your hands on the debit card. You now have a way to cash checks that are payable to you without allowing someone to simply walk in and drain your account without warning. Can this strategy withstand a full-scale legal attack? It varies. It would first need to be known to your opponent. It would be better equipped to withstand a lawful assault with the extra weapons on this list. It provides you with the convenience of easily cashing checks made payable to you, regardless of its ability to survive a powerful legal storm. This organization has seen countless individuals effectively evade detection for many years by using this tactic. A trust used to hold title to real estate is called a land trust. You can own your property in the name of a trust or trustee rather than in your name when you create a land trust. By doing this, your name is kept out of the public domain. The trustee's name and the trust's name are visible to the public. A Wyoming LLC with nominee management that you own may serve as the trustee. It will also have a Wyoming virtual office address. Should the necessity arise, we offer both of these services in addition to company creation. Your name won't show up in a public records search if all of your real estate interests are held in different land trusts. This enables you to keep your real estate ownership hidden from inquisitive eyes and in secret. You can create separate land trusts for each piece of revenue property, your house, your second home, and other kinds of real estate. If you transfer property into a land trust and you remain the beneficiary, the Garn Saint. Germain Depository Institutions Act of 1982 prohibits a bank from calling a loan due on the transferred property, provided that the property comprises of 1 to 4 dwelling units. All 50 states now use land trusts. Certain state statutes deal with land trusts, whereas others don't. This kind of trust is lawful even if the state code does not discuss it in detail. Not every aspect of existence is outlined in the law. For instance, the way you style your hair to make a certain hairstyle legal is not covered by the state or federal code. It doesn't control the number of books you own or the hue of your sneakers. Common law thus governs in these situations. What has been widely acknowledged over the ages is what common law refers to. It is the unwritten law, particularly that which comes from England, that is not derived from written statutory law but rather from custom or court rulings. It is undoubtedly permissible under common law to use trusts to own real land. Land trusts aren't meant to safeguard assets. They are vehicles for privacy. Having a distinct LLC as a beneficiary for each land trust that owns income property is regarded as best practice. This helps shield the linked individuals from lawsuits by hiding ownership via the land trust and offering asset protection and lawsuit protection through the LLC. It is typically advised that natural persons continue to be beneficiaries of land trusts that own primary residences for the home ownership tax advantage. This can preserve the large tax-free earnings upon sale, the interest deduction, and property tax adjustments. For married individuals seeking estate planning, asset protection, and privacy, spousal gifting trusts are a good option. You can save estate taxes, get asset protection from creditors, and maintain asset privacy with a spousal gifting trust. Better yet, if you ever require access to those assets, these kinds of trusts grant you significant control over them. Like most trusts, this one offers a comparable level of privacy and safety, but the added benefit is that it combines asset control with privacy. If created and managed appropriately, a spousal gift trust is a kind of irreversible trust that can provide significant asset protection for both your spouse and your descendants. This can be particularly helpful in states without community property laws. However, each person's circumstances are unique. It can also be set up such that trust assets become a part of the less vulnerable spouse's estate. The purpose of a spousal gift trust is to give your spouse lifetime annual exclusion gifts that would not otherwise be used. Because of this, it resembles a bypass trust, which is a trust that avoids paying the federal estate tax when the owner passes away. In essence, a spousal gift trust involves the irreversible transfer of assets to the trust, usually valued at $260,000, but not more than $1 million. Your spouse is both the beneficiary and the trustee or co-trustee. Furthermore, you can give your children and any descendants lifelong gifts of $14,000 per year as of this writing. These people may also be beneficiaries while your spouse is alive, or they may get any remaining benefits upon your spouse's death. If your spouse passes away before you do, they may be able to designate trust assets for your benefit during your lifetime or at your death. Thus, you've taken care of yourself in some ways. 1. You have made private transfers of assets to other people that are not documented in the public domain. 2. You've lowered or removed the gift tax. 3. As part of your estate plan, you have employed a mechanism that allows you to control how your assets are transferred. Family limited partnerships (FLPs) and family limited liability companies (LLCs) provide strong asset protection and privacy against creditors and litigation. You can invest your assets in the business or partnership through any of these entities. To avoid having your name shown in public documents, your LLC may designate nominee management. If you do use an LP, you can use an LLC as the general partner of the LP as a liability shield, as the general partner is susceptible to litigation against the partnership. Family limited partnerships (FLPs) and family limited liability companies (LLCs) provide strong asset protection and privacy against creditors and litigation. You can invest your assets in the business or partnership through any of these entities. To avoid having your name shown in public documents, your LLC may designate nominee management. If you do use an LP, you can use an LLC as the general partner of the LP as a liability shield, as the general partner is susceptible to litigation against the partnership. Imagine investing your assets safely into the business or partnership. It can firstly safeguard your privacy. Then, it protects your assets because each of these businesses has built-in asset protection clauses. So, if you are sued, an LLC or LP can protect your assets from a creditor attempting to take them. You can hold assets privately if you have trust. You should be aware that depending on how you set up an irrevocable trust for asset protection and privacy, you may or may not receive either in some places like California. For example, creating your irrevocable trust and designating yourself as its beneficiary nullifies the trust's power to shield assets from creditors in California and many other jurisdictions. In summary, since this kind of trust is unable to legally shield you from creditors if you are the beneficiary of an irrevocable trust in some states, you are forfeiting your privacy and asset protection. It is regarded as a trust that is self-settled. Certain states permit asset protection through self-settled trusts. People who designate themselves as beneficiaries of irreversible asset protection trusts are permitted to do so in these states. They enable people to create these kinds of trusts while maintaining their creditor protection. This kind of trust can protect you from creditors and litigation in states where they are permitted. You must comprehend that the trust's domicile impacts whether or not you can use it for asset protection and privacy planning. Asset protection and privacy are elevated to an entirely new degree by offshore asset protection trusts, which is a major improvement. In Belize, the Cook Islands, and Nevis, asset protection trusts permit self-settled trusts that offer strong asset protection. Although us courts have authority over us trusts, having an offshore trust, offshore trustee, and offshore account frees the local judiciary from making many of the decisions. The founders of this company have created 40 offshore trusts, and during that time, neither the settler nor the beneficiary has lost any money. Therefore, the Offshore Asset Protection Trust has proven to be the most effective asset protection vehicle for liquid assets out of all the available options. Your offshore trust will fully own an offshore LLC. The offshore LLC has an account at a bank or brokerage. Until the trustee steps in to shield you from a judge's order to return the money, you remain the signatory on the accounts. In the Cook Islands, there is a statute of limitations ranging from 1 to 2 years for fraudulent transfers. As a result, even if your adversary files a case in the Cook Islands before the deadline and outwits you, it is unlikely that they will be able to access the assets you have placed into a Cook Islands trust. However, it is nearly impossible for your opponent to get your assets if you place them in a trust, and they have been there for 2 years or longer. Is the trustee someone you can trust? To get a license, the trustee had to endure arduous background investigations. An insurance company that guarantees your complete restoration in the case of misbehavior binds the trustee. Furthermore, in the more than 40 years that this organization has existed, neither a settler nor a beneficiary has ever been treated unethically. Remember that the trustee would only intervene if the courts seized the funds. Imagine yourself in the middle of the ocean on a sinking rowboat while a cruise ship passes by. Will you say to the captain, "Look, I would love to come on board, but what if it sinks?" Or are you just going to hop on board? Here, it is the same. The trustee should only become involved when you believe your financial situation is collapsing. Companies that provide captive insurance provide significant recurring tax deductions, though it isn't typically thought of as a privacy tool. It has so many amazing advantages in other domains that it is worthwhile to discuss. Let's start by talking about the captive insurance program, which is a very effective instrument for anyone looking to take advantage of a sizable federal tax loophole and have extra income flow. Forming your insurance firm and paying the premiums will give you a great shield against losing that surplus money in the event of a lawsuit, protecting that extra income as well as providing yourself with some more privacy and asset protection. Your assets are the result of your hard work. Although protecting them doesn't need as much labor, a solid asset security plan still demands expertise and close attention to detail. Your assets could be destroyed by a lawsuit or other unfavorable event if you do not create and implement an effective asset protection plan. There isn't a plan that fits everyone. There is an ideal plan that is specifically designed for you if you want to know how to safeguard your possessions. Thus, consult with a knowledgeable consultant. Protecting your assets depends entirely on the way your company is set up. The simplest option for a one-person firm is to operate as a sole proprietorship, but you shouldn't. The assets of a sole proprietorship are not segregated from those of the business. If the firm fails or a client files a lawsuit, your home, personal bank accounts, and other assets may be taken by creditors. For asset protection, an LLC or limited liability company makes significantly more sense. You are shielded from personal accountability by an LLC. Members may make up this entity but not shareholders. Since the profits of an LLC belong to its members, the IRS does not by default view it as a taxable company. Tax on business profits must be paid by the members. Members of an LLC are self-employed and are required to pay self-employment tax on their regular income when their business is run as an LLC. Medicare and Social Security are included in this. Capital gains and rental income are two examples of exclusions from these two taxes. All income is reported by members on their tax filings. Through the proper filing of an 8832 form, the LLC may be subject to corporation taxation. Additionally, AS Corporation may be formed if a 2553 form is filed. State-specific regulations differ, but forming an LLC doesn't cost much. The S Corporation is an additional corporate form that offers asset protection. A corporation that elects to pass corporate income, losses, deductions and credits through to their shareholders for federal tax purposes is referred to as SS Corp by the IRS. Unlike bigger C businesses, S Corps are exempt from paying federal corporate income tax on profits. Nevertheless, they may be obligated to pay state income tax. The IRS caps S Corps to 100 shareholders, all of whom need to be citizens or lawful permanent residents of the United States. Shareholders can be individuals, but partnerships cannot. Individual tax rates are applied to income reported by S Corp stockholders on their tax returns. By default, U.S. for-profit companies are C corporations. The most typical process for converting a C corporation into an S corporation involves filing Form 2553 with the IRS. This needs to be completed within 75 days of the company's formation or within 75 days of the start of the year in which the S corporation status is desired. One drawback is that S corps might be subject to more IRS scrutiny than other small business arrangements. To preserve your assets, you must always keep the corporate veil intact while using LLCs and S Corp. This entails holding yearly meetings of directors and shareholders and drafting minutes from those sessions. Resolutions about significant business decisions are stored in writing form. Additionally, it prohibits combining business and personal holdings. You must properly title all corporate assets, utilize corporate credit cards and bank accounts for business-related purchases, and use personal credit cards and checking accounts for personal expenses. The majority of states offer a homestead exemption to reduce property taxes. However, some also offer protection from creditors for the primary residence and its equity. That is something to think about if you intend to relocate. One of the more generous homestead exemptions is found in Florida, which protects up to 160 acres in rural regions and up to half an acre of land inside a town. That exemption, however, does not extend to any mortgage-holding lenders. States mandate that drivers carry a minimum level of liability insurance. However, in the event of a large collision resulting in significant injuries, minimums are meaningless. A lawsuit is almost certain to occur in the absence of sufficient liability insurance. Verify that you have enough coverage. Make sure your umbrella insurance covers these types of disasters if you combine your auto and house insurance with the same provider. The majority of your assets might be found in your IRA's 401k and other retirement accounts. The majority of states shield these assets from creditors, which is good news. Your retirement assets, however, could be jeopardized if you neglect to pay child support or if the IRS determines that you owe taxes. Up to $1 million in retirement assets are now protected from bankruptcy under the 2005 Bankruptcy, Abuse Prevention and Consumer Protection Act. Planning for your estate should be a part of your asset protection strategy to maximize its effectiveness. For instance, place your assets in a revocable living trust to bypass the probate process. The assets are now owned by the trust, but you still influence them as the grantor, trustee, or both, just as you did when they were in your name. Throughout your life, you can purchase, sell, and add assets to the trust. The trust is unchangeable and irreversible after your passing. Your designated beneficiaries receive your assets. These are but a few strategies for enhancing your asset protection scheme. If we knew what lay ahead in life, it would be easy, but that's not how things work. People who know it is simpler to steal your money than to work for it themselves are constantly there, waiting to take advantage of you. Avoid becoming a victim of the justice system. You may avoid most of these anxieties by taking every precaution to protect your assets. Stay tuned for more information.